This is Hashtag Finance, presented to you by the Canadian Securities Exchange, the exchange for entrepreneurs. With your host, Anil Mall.
I'm Anil Mall with the Canadian Securities Exchange. Thank you for tuning into another Hashtag Finance episode. Today I have the pleasure of talking to Derek Wood. Derek is the president of Tocvan Ventures, which is listed on the CSE. Derek, happy birthday.
Hey, thanks. How'd you figure that out, Anil?
I dig around a bit.
Okay, yeah, no problem. Thanks very much. Nice to see you.
Of course, it's always a pleasure to see you, and I guess virtually now.
Yes. Well, we'll get together in person again.
I look forward to that. So how's the last 3-4 months been treating you? I mean, I think the last time I seen you was at PDAC in Toronto in March. Like a lot of people, and we were all there. So how's the transition been for you over this last little while?
Yeah, I remember seeing you in PDAC, and it was a great PDAC. I was there with one of my other companies I work with, and it was a fantastic PDAC. We were all very excited, and we came back, and all of a sudden nobody could go anywhere. It was kind of the exact moment I think the COVID outbreak and shutdowns and everything started was right when we all got home.
Absolutely. It was literally 2 days later we were told to go home and stay home.
and quite honest, I've never been busier since. It's been in the basement in lockdown for the most part, but 13, 14-hour days. I went back to the office starting June 1st, and again, 12, 13-hour days. We've been hiring people, and it's been busy like crazy. It's really, in some ways, it's beneficial. We always knew the Zoom stuff and everything existed, but we were never really forced to utilize it, and it's been tiring. I'm looking forward to things normalizing a bit, but I think myself and the people I work with, I think we've used the time really productively.
Absolutely. I mean, I think moving forward, we'll definitely be utilizing Zoom. I mean, even for us at the CSE, we would obviously wait for an opportunity at a conference, or if you were in Vancouver, or if we were in Calgary, to kind of get together face to face and have this conversation. But we've been able to kind of utilize Microsoft Teams, Zooms, Instagram Lives, and be able to still create content and get those eyeballs and still get information about what our public companies are doing. So Derek, you're obviously based in Calgary. You're in Shuswap right now at the lake. But before we get into our conversation about Tocvan and what you guys do, actually, before we get into our full conversation, why don't you give our viewers a brief introduction to Tocvan and what is Tocvan Ventures? What's the vision?
Tocvan is a mining company, relatively new. It's about 1.5 years, publicly listed company. We went public just, it wasn't really an exciting mining market when we decided to put a mining company together. But looking at the space, I've been a long time participant in the capital markets, and with a bit of a focus on mining, it's been a really rough go, particularly since 2012. So we look around, a lot of the companies have had to really struggle to survive and stay financed, and that's created, in one hand, a lot of opportunity, I think, for newer companies coming along. So we went public. We optioned a property. It's called the Rogers Creek property in British Columbia. It was an advanced stage property. It originally was a Wallbridge prospect, and they spun it out, and company we optioned it from ultimately was called Karube. They had done about $3.5 million worth of work on it. It's a great looking property, and that we IPO'd on that. We have an option to earn up to an 80% interest. Then we started, now that we were public, we started looking around at companies that were what I like to call property rich and cash poor, because it's been very, very difficult times for some of these companies. And we looked at 150 to 200 properties before we found one that we felt suit our needs, and that's called the Pilar property. Again, we can earn up to 100% interest in this property. It's a very advanced stage property in Sonora, state of Mexico, and we were able to get some terms that I think work very well for us as well as our optioning partner, and We've been moving ahead really on schedule, actually, even in spite of the COVID outbreak and everything. And the more we unearth about this property, the more we like it. It's not huge. It's not like we're looking for billion tons of porphyry style copper or something like we would be in Rogers Creek. Um, it's an epithermal advanced stage at surface. The metallurgy tests have been awesome so far. It's had 17,400 meters of drilling, and we've taken a very systematic approach to it, and we're really excited about what we're unearthing, and we plan to drill it in the fall. And we think we're going to have a new near-term resource and very likely near-term production on this property. So it's exciting. I think we're drastically undervalued, but that's part of the fun, I guess, is getting back on the road and telling people what you got and doing stuff like this. So
Exactly.
yeah.
I really like both the regions you guys have a focus on. So obviously Rogers Creek is southwestern BC, and then the Pilar property is Mexico and Sonora. So I want to get into both of those regions, but I want to touch on something that you talked about previously. And we have a lot of viewers that are new to the mining space, so they might not really know the difference between, I know you mentioned porphyry property and epithermal.
Yeah.
Can you maybe give us a brief breakdown so people can better understand what that actually means? I mean, people like you and me would definitely get it, but in case there's someone watching and that doesn't know the difference.
I get it to some level, Anil, but I'm not a geo. I spend my life talking to a lot of geos, and I'll talk about the differences between our two properties from a CEO sort of perspective and a guy that's going to have to raise the money for the two. So
Okay.
Okay, I view Rogers Creek as a much more game-changing, huge target, right? It's copper porphyry. What you're looking for there, usually it's lower grade, but large tonnage, and they tend to be very difficult to disseminate and come up with a resource on them. When you do, what you're looking for is sort of 500 million to 1 billion tons of copper, and on this belt where Rogers Creek is, it's called the Miocene age rocks, and it's on the Cascade trend that goes all the way into the United States. There's been 3 copper porphyry discoveries on there over the years, but not a lot of work north of the Canada-U.S. border. And what happened with this property was when they started doing logging on it, they found some huge outcrops at surface. It tends to be this property in particular is more expensive to explore on. You can't explore year round, of course, because but when you do, if you are successful, you tend to have a really big game-changing event. Okay. Now on the Pilar property is kind of a little bit of the opposite. It's an epithermal system, so a lot of these fluids came up almost to surface, and it tends to be much higher grade gold. And in our case, it looks like there's something right at surface that could potentially, be open pitted, pretty quickly, and then there's underground potential below that. So we like that. When I said it suited our needs, to me, my goal is to get this company advanced with as little dilution as possible, so that when we do have success, that shareholders make as much money as possible, right?
Absolutely.
So this is something we thought we could get over the goal line and I either succeed or not succeed, but I think we're going to succeed very quickly. And if we do succeed, then our sort of goal here in the next couple of years is to have a producing asset that's kicking off a bunch of cash flow, and then decide what to do. It's a nice problem to have, right? So we could use that to, on Rogers Creek, or we could look at another property, or we could just return some money to shareholders. But we're looking at, there's some comparables out there. I don't want to mention them by name, but they're, sort of 30, 35,000 ounce a year producers. And I don't think we're that far off that, knowing anyways on Pilar, but there's historic drilling. It's all been in one zone. Nobody's really done a systematic, detailed survey of the property before, and that's what we've been working on. So every time we've gone out, we've discovered more zones. We just recently released the highest grade assays on the property at surface, and this is all building on 17,400 meters of drilling that have had some tremendous results, all in the northwest corner of the property pretty well. So there's room to get, I think, to production quickly. We won't know that exactly yet. We got to do our next thing will be drilling in the fall.
Okay.
Follow that up with a bulk sample, and then hopefully we can start moving to production within the next couple of years. And
did you guys just
that'd be a home run.
I apologize, Derek. I didn't mean to jump in there, but
That's all right.
my question was, you guys just completed a drill program, correct?
No, we haven't. We ourselves haven't drilled on it yet. When we picked it up, the process we have, we start looking through property after property after property, find something interesting. We look into it a little bit further, then we get sign an NDA, usually with the company or the person that owns the asset. Then we run that through some more modern software and modeling software that the geos use. So there was 17,400 meters of drilling on it previously. There's even an intercept in there with, don't quote me exactly, but I think it was 56 grams over 17 meters was the highest grade in there, but there's a whole lot of 10-gram intercepts, and the property's never really been drilled below 100 meters. We think there's already a resource at surface. It's not compliant yet, but we've modeled it, and it's not huge yet. All we have to do, I think, is add to it a little bit, complete a bulk sample, and finance a production. But yeah, there's some examples down there. People are financing these production stories down there for less than $15 million, and they have kick off $25 million a year cash flow at the current gold price. So
yeah. For any of our viewers that are interested in these numbers a bit more, I would definitely recommend you to go over to the Tocvan Ventures website. You'll be able to find all the details in their corporate presentation and their press releases. And I'm sure you can obviously reach out to either Derek or his team as well. Derek, I wanted to talk to you a little bit about your background in the capital markets and within the Canadian capital markets. I've known you for quite a while. Actually, one of the first people I'd met when I was doing investor relations in the mid 2000s. But how did you get started in this? Give us a little background on your experience within your history within the Canadian capital markets.
Okay, sure. It goes back a long way, and I guess I'm going to start to show my age. Like you said, it's my birthday today. It's
I love hearing things like this.
Yeah. So, I'm from Ottawa. I was out in Vancouver just teaching skiing, and the season ended. So, I did various odd jobs, including working in a phone room in Vancouver, where I met a guy who was an old stockbroker. Sort of found out about the business. Anyway, I started, if you look at Tocvan, it actually stands for every city I've worked in this industry.
Oh, interesting.
Toronto, Ottawa, Calgary.
I've known you for such a while now, and I did not know that.
Yeah. So anyways, I've worked just in and out of it. Always very interested in this junior cap space, but in Ottawa, it's not as prevalent on the minds of the investing public, and Toronto's a whole other ball of wax, and Calgary's great. And, but just, worked through it, took all the courses in the Securities Institute, and had various positions and within, big bank wealth management. I started in a little boutique that's no longer with us in Vancouver in, I think, 92, and big bank owned brokerage firms in the wealth management side. And then, 2 or 3 boutique firms, and ultimately I started my own company. Started as you did, I said I'd be a investor relations. I recently changed the name of my company from Conduit Investor Relations, Conduit Capital Markets, and that's because we do a lot more in investor relations. Where vending properties. I have 3 geos working with me now, and a full-time caller.
Yeah.
And we're put together deals, we raise money, and my big beef, not beef, but what we're trying to do is we're just trying to make them as equitable as possible. So that one of the things that I think has really hurt the capital markets, there's a ton of them, but one of them is just the structure of these things at the outset seems to tilt the wheel a little more favorably to a few people, and then huge salaries on top of that. When I started in the business, if we looked at a deal with 20 million shares out, that was considered a crazy amount of shares to be issued and outstanding. And
Now you'll see
now I
some
think
200.
the average is about 100 million shares out. So um, there's a whole bunch of reasons for that, but one of the reasons is I find there's just too many shares issued up front before you've even de-risked a company. And that's what we're trying to do. We're trying to make so everybody gets a living that commensurate with their activity and everything.
Yeah.
But if you're going to get wealthy, it's going to have to be at with the success of the company, just like your shareholders. So a lot of people out there take huge salaries and big options and big stock packages, and we're just saying, well, you should don't take both. Make a living. Provide some upside if you're successful and you add this value to shareholders. But
There's
we're
definitely has to
really,
be,
really,
there's
yeah.
definitely that balance that you have to have.
There's and it's not easy. Things cost money, and it's not just salaries and all that have gone up. All the expenses has gone up, but the takeovers of mining companies seem to be about the same price as they were in the mid '90s. It's just in the mid '90s we'd have 30 million shares out. Today we have 400 million shares out. By the time these things get taken out, like a successful mining deal starts off, it's taken out somewhere $500 million to $1 billion, right? Well, nothing's changed. The only thing that's changed is, today some of these companies, by the time they get there, have hundreds of millions of shares out. So nobody, these are supposed to be big life-changing events, and it's what we work at, is to try to bring back that a little bit more to the capital markets, where these wins become. And the only way you can do that is not take a lot of salary out of it, be very frugal on expenses, and try to do. As you de-risk a company, is really put some effort into your share price to make sure that de-risking is reflected in the next round of financing.
Absolutely, especially in the early stages of the company, when you're trying to establish something, improve a resource, and kind of obviously get that get your shareholders to be confident in the vision that you and your team have to move the project forward. Why don't we talk a bit about your team? We've talked about your background a bit within the capital markets, but why don't you tell us a little bit about the team at Tocvan that you guys have put together to see the vision of the company move forward?
Yeah. Okay. Sure. Well, it's myself. A great colleague of mine too is Brody Sutherland. He's him and I sort of had this idea and this shared vision to start this company and try to keep the dilution to a minimum. Brody's a consulting geologist. He works with a number of junior companies. I think today he's leaving for Alaska to do a geo program up there, where he's had quite a bit of success. But he's a geo, younger guy, but his own consulting company. We have access to a lot of the software, and he's a very, very bright guy. And then we started the company, as I said, with Rogers Creek, and him and I, and then our CFO, actually based out in Vancouver, Greg Ball, just fantastic CFO. He's very diligent, organized. All the things we're not, he is, right? I mean, or I'm not, he is. Just, he files everything perfectly, and he does all the NDNAs and everything for us, and he's got a lot of experience working within this junior space, and that's how we started it, just the three of us. Then we added an now not one of us take a salary out of the company, but then we hired another geo to help us out, because the only reason, let's face it, the only reason we're able to do this is, run a company and not be taking money out of it, is because we have other jobs, right? So I have Conduit Capital, so I have some clients there, and then Brody has Sutherland Consulting Geo, and Greg works with a number of companies. So that's how we're able to do it.
It works as a collective, right? You kind of bring that whole into one pot, which is Tocvan.
Yeah. So, but our exploration geologist now, Mark Smethers, he came in after we went public, and he really worked to identify the property that we chose when we chose the Pilar property, and he's taken a little bit of a salary out. I think just a few $1,000s a month, and that's how we're keeping it tight. But he's considers himself a delineational geologist, and he's got a lot of experience, like 25, 30 years of this. And everybody, like I say, deserves to make a living. So he's making a little bit of money, but nothing outrageous. And we're a tight group that sort of have this vision where we want to bring this along with as little dilution as possible. So um, that's a pretty good team, and yeah.
Well, no, it sounds like you guys have a great, I want to say, marriage between your whole group, collectively, like I mentioned earlier, trying to see your vision move forward.
So
Um,
I forgot to mention Fred Jones. He came on after actually we got the Pilar and everything. But um, Fred's got a lot of experience with much larger financings in the resource space. So he used to be VP at Bear Stearns, and I think it was, I don't want to say the wrong thing, it's Morgan Stanley, but one of those other big U.S. Brokerage firms, investment banks, and he was stationed in Asia, and he used to sell a lot of commodity-backed distressed debt. And when we get to the next level and we have to raise much bigger sums of money, I think he would be great. And he's also a chartered accountant as well. So he really added an extra dimension to it. So sorry, I don't know how I forgot Fred, but
no,
Fred's a big part of what we're doing. So.
I'm glad that you were able to remember him and bring it up, because he probably wouldn't let you live it down.
Yeah, that's right. That's right.
So both of the regions that the company has focused in, obviously the Sonora region of Mexico, Southwest BC, they're, really good mining jurisdictions. Why don't we start talking a little bit about the benefits of having projects in the mining sector within Canada? We'll start with that. Why,
Sure.
why Canada?
Well, okay. Let's
I
talk
know
about
why, but
yeah, for such a small country, Canada sure has a lot of expertise in mining, and its history goes back very, very far. Where you live in British Columbia, it's probably one of the biggest things that created the civilization that exists there right now is mining, and of course where I am in Alberta, oil and gas, but resources. And Canadians are pioneers at exploring and moving these projects along and ultimately putting them to production. They're experts at that, not just in Canada, but around the world. Canadians are lend their expertise very well to that. And there's been some challenges over the years, but I think Canada really is a fantastic resource-backed economy for now. And this is where our recovery is going to come from. It's going to come from the earth and the wealth that already exists inside the world here. We have a great regulatory framework that's already been established in terms of the reporting standards and everything. They maybe sometimes they have to be tweaked or something, but we have a royalty system. We have the ministries of financings. We have a lot of stuff in place to succeed here. And coming into this market now, we have the benefit. There was not this many advanced projects when I started in the business, right? You had to do a lot of more grassroots, very early stage place. Well, there's been such a lull in the market now, but prior to that, the first half of this, first part of the new millennium here, from 2003 to about 2012, with a couple little minor breaks in there. There was a ton of money went into the ground, went into this sector, and just because the share price has changed, the advanced work that these properties have undertaken have, they exist. The properties don't change. Now there's been new software, everything, tons of different ways to analyze the old existing data, artificial intelligence, this sort of thing. So
yeah.
I think it's the beginning of a great new time in our market. Then you add in the ability to reach people directly, retail investors, where the retail brokerage network has broken down a little bit over the years. It's discount brokers and big bank consolidations of brokerage firms and demographic aversion to risk and stuff like this. But now that we have the ability to go out and pinpoint people that actually want to learn and know and invest in this sector, with these advanced stage properties, with all the software that we're able to use to analyze old data, it's a really exciting time, not just in Canada, but I think worldwide.
Absolutely. And don't forget, the infrastructure, whereas, maybe about couple of decades ago, or even a decade ago, it might not have been, some of the properties might not have been that accessible. Whereas now there's access to roads, there's power, there's, all that stuff coming in, and also being able to find that workforce to be able to go to these camps and work and things like that. I think that's definitely, people within the communities have seen the benefit of mining in Canada, and I would like to say they've accepted it because they see the good that it brings to some of these rural communities where these properties are. Would you agree?
Yeah, well, absolutely. And not just the rural communities in Canada, but one of the quickest ways to generate prosperity in a third world nation is through the development of a natural resource. Right? It creates jobs, it creates royalties, it creates infrastructure around that. Usually a mining company will assist a community with certain projects if once they're getting more advanced and everything. So, and no, I think resource development is the quickest way to prosperity. And Canada, and I'm looking at Canada, I mean, we're vastly vast amounts of resources that left to be liberated from the ground here and turned into wealth. And it's really exciting. I think that some of the problems we have regulatory wise and with some of the groups that pose to mining, it's really just lack of understanding between different parties involved, and the process and some of the technology that exists now to keep stuff, people concerned about the environment. Well, these commodities are going to be used. You might as well use. Canadians have really developed some of the most sound environmentally friendly ways of extracting resources from the ground. So, there's going to be demand for these resources, like it or not. I'm not saying there's no environmental impact, but Canadians tend to do things very responsibly, and I think we're the right people to sort of stick handle that environmental aspect as well as the need for these resources. And ultimately it's going to be what builds this country.
Absolutely. And it's using platforms like this to provide that education to not only investors, but just to the general public about, the benefits of mining within the Canadian space, and, like the reclamation and how responsible actually we are when it comes to mining in BC and Canada. There's a lot that you have to do and go through to be able to move these projects forward. And a lot of people don't realize that. I think it's, they hear one thing and then it kind of just gets the ball rolling. But I love that you touched on the point that, we really have good practices when it comes to mining these resources out of the ground here in Canada.
Yeah.
I love that you're so bullish.
Well, yeah, never more so in my whole career than I am right now. So, I mean, some people like to say, even a broken clock is right twice a day, right? But no, it hasn't been an easy time. There's been all, the career
There's been the ebbs and flows for sure.
It's been a lot of fun. There's been a hell of a lot of fun, and now I think this is a real sweet spot that's coming up here. Canadians, by the way, too, not only was, the actual expertise of mining, but we kind of invented junior capital financing to some degree that provides the early stage capital to, for these things to get financed, not just in Canada, but around the world. And it's changed the way it works over the years, but yeah, I mean, we invented that game too. I mean, the Vancouver Stock Exchange, for its good and its bad things, was really the largest public venture market in the world. And
absolutely.
now we have you guys.
What's that? You want to tell us something that comes to mind from those days? A nice story. Different platform.
I'd love to, but that'll be an in-person call with some beer. Right?
I look forward to that. We'll definitely do that.
Of them. There's millions of them. And, yeah, there was problems. There's always been people that try to get something for nothing in this business, and try to mind the shareholders instead of the properties they have. And it's always going to exist when you have something there. You're looking for a home run, type situations. But we've come a long way. We've come a long way to reducing those scams, I guess, if you will. I mean, there's been a lot of, the Briexes of the world, and the Cardaway, and back in the 90s, there was a whole plethora of them. And we almost went too far the other way now, I think, but you know, it's up to the individuals. You got to research who you're investing in, and if you pick the right people right now, there's a ton of opportunity. Just, you know, it's not hard now with everything we have available to us to figure out what a guy's real motivation is in running these companies. And if it's just to pump a stock up and dump it off and put some money in his pocket, then don't put your money in there.
Absolutely. And that's such a great point that you bring up. You know, when I first started in this space, one of the first companies I worked for, I didn't really know much about the mining space at all. And I was taught the 3 Ps: people, property, and then the price. Those are the 3 things that you look at when you're
5.
There's 5?
Yeah. People, property, price, promotion, and politics.
You've just educated me with 2 more today.
There you go. Well, thanks.
I love it. I love it.
Yeah. Well, I learned that from Doug Casey. No, it was Doug Casey's 5 Ps, but yeah.
The 5 Ps from Doug Casey. Okay, perfect. Yeah. No,
well, I don't know if he invented it, but it's the first place I heard of it, and then I've been using it ever since. But yeah.
Well, it truly makes sense when you put it in that order. You're like, okay, well, this does make sense. People, you know, if you can't trust those people, why would you invest your hard-earned money into it? Or if you don't believe in those people, it's not even the trust. If you don't see their vision, and they haven't been able to kind of meet these milestones previously, if they've been saying it, kind of puts it out there. But I want to play a little bit of a devil's advocate. So we've talked about the benefits of Canadian mining, and I'm not going to be too negative, but maybe one thing that you think that we could do better here.
Can I give you like 2 or 3 or 10?
Floor is yours.
No. It's not. Let's not bore people too much. But
yeah, that's what I said. Pick one thing, and then you know, because we don't want to be too negative either, because we've got a lot of good things happening.
Well, I'm gonna just give you a couple of things here. So in 2012, the regulators, you know, under the what's called the universal trading rules, and UMR, I think so, University Market Integrity Rules, they allowed what's called shorting of stock on the venture exchange and on the CSE and on the Toronto exchange on a downtick. So that means if you can sell a stock you don't own, and you've always been able to do that. When I started in the business, you actually had to do it on an uptick. So you could sell a stock you don't own as long as it was at a higher price than the previous trade. Then they changed that to the last tick rule, which means you can sell a stock you don't own as long as it is at or higher than the last trade. And then in 2012, October 2012, and you can look at this steep double black diamond downward dip in our market from that point. They said you can short any stock at any price. And there's some reasons they did that in the larger markets to try to balance some of the ETFs and stuff like this. Why they did it on the venture, I don't know. You know, there's not as many participants. There's not a true intrinsic value on these deals yet. And when you come out with a really good news story now, yeah, there's people like me, you know, especially we're trained in the old ways. We're like, hey, that's awesome. You know, like that company just hit 100 meters of, you know, 8 grams gold. Like, let's get on and buy that. Well, we know there's only so many of us that are buying the stock because of the de-risk nature of it. But there's so many people that have no connection to the stock, even algorithms and such, based on how much stock there is to borrow. They're just killing the market. You got to work your ass off. You got to keep the you know, the shares as tight as possible. And then even then, you know, so you know, maybe they did it because the valuations were getting out of hand. I don't know, but to me, we're just winding up again. The biggest challenge we have is too much dilution by the time these things become successful. The other thing that came out, you know, in the post-Bre-X, post-90s scam market, of the mid-90s, where there was actually some good real discoveries in there, but there, you know, it was sort of a lot of crap in there. Is they came out with the 43-101 standards. And those are the standards that, you know, if you're going to publish a technical report, or you're going to, you know, publish a state of resource or something, somebody actually has to sign their name to this and stake their credibility to it and everything. And that was the idea of it. Well, the standards in there that I don't know enough about it, but, you know, I know geos that understand, a lot about where these, it's not that we don't need standards, but they sort of, all these standards focus sort of a lot on the wrong things, and they just make everything more costly. And it's one of the other reasons why we have hundreds of millions of shares outstanding by the time these things become into fruition. Sure, maybe we needed to guard the public a little bit more against shysters back in the day, but we've gone so far now that it's harder and harder to make money now in this sector. And this sector's got to reward people substantially in order to attract the type of capital that we need. And little 40 cent to $1 wins is not going to do it. A win's got to be a life-changing event. And we're getting back there a little bit. It's very exciting. Some of the stuff that's happened in the market hasn't happened since the 90s. Got Great Bear Resources. I saw them finance, I think it was 40 cent flow through, 35 cent hard. Next round was $1.40. I was doing backflips when that happened. And not just recently. I think they have 50 million shares out there, trading $20. They just fought the huge finance is $17 recently. I mean, it's amazing. It's absolutely amazing. And there's other stories like that as well. And it's really starting to happen again. And I think it will. I think the trend will continue. And I think maybe Tocvan will be one. It's hard to believe with just a $3 million market cap, 18 million shares outstanding, 2 advanced properties, a good management team. And it's our goal to do that. So, Tocvan is beginning with the end in mind a little bit. We're not just issuing shares to keep going. We'll hurt a bit ourselves in order to keep this structure as tight as possible. And we have a property here it's got gold. You can look at the past drilling results, and you can look at the work we've done to open up the property. And there's a potential, not a grand slam home run, but there's a risk return basis. It's awesome, So
yeah, no, and these are all things that I'm glad that the Canadian Securities Exchange provides us this platform to be able to talk about, and not only educate and talk to your existing investors who might watch or come across this content, but even just people that might be curious about the mining space and investing in the capital markets. There's a lot of information out there. And I think that some of these platforms where we get to talk to individuals like yourself, who can touch on your background. You've obviously been dedicated to the Canadian capital markets and the mining space throughout your career. So I think it's great to have this platform to be able to get these stories and this vision out there. Now, let's talk about your Pilar property in Mexico.
Sure.
That's in the Sonora region.
Sonora State of Mexico. So it's actually the most prolific mining region in Mexico. I think it's about 60% of the gold and silver production in Mexico comes from there.
From that region.
Now, recently you've seen some great moves. We're not far from the Colorado mine owned by Argonaut, which is a huge silver gold producer. We're not far from Minera Alamos is sort of a type of level I think we can get to. Minera Alamos is putting a Santana mine into production just to the northeast of us. They got a financing from Osisko Gold Royalties, and they got a great group of guys there that have experience putting these mines together, great metallurgical experts and great management. And so I'd say maybe they're quite a bit more proven than we are, but and their properties definitely further down the road than we are. However, I think we can get to a similar situation. I think their plan is to put about 35,000 ounce a year production facility in place at Santana. And as I'm saying, I think we'll be at the bulk sample stage of that within a year. And we know we have an epithermal at surface gold system here. We know that part, so anyway, long story short, they have about $170 million market cap. We have a $3 million market cap. It's not direct comparison, but $3 million market cap is certainly ridiculously light when you consider the likelihood we're going to get where we're going here. So
no, you're absolutely right. And again, the difference between your property in Southwest BC and this one is, to me anyways, would be that you'd be able to explore, develop this property. You're throughout the year. Whereas in Southwest BC, there's only a certain amount of time that you have where it would be, and correct me if I'm wrong, where it would be accessible and you're able to kind of.
Oh, absolutely. And it's way more expensive to get material in there. Here we can drive right to the property. You can drive to Rogers Creek too. And don't get me wrong, I still love the Rogers Creek property. It's just that I'd rather get some cash flow going, so my goal really is to get this Pilar property to a production story with less than 40 million shares out. And then, so if you have, sort of a $80 million market cap at that time, that will be great. But it won't just be great because the share price has gone up. It'll be great because now you have cash flow that you can go out and expand things without further dilution. That's the game plan here anyway. So yeah.
I think this conversation's been really informational to myself as well. I think we've touched on a lot of good points. We've touched on a couple of things that might be a hindrance to the mining space as well. I want to ask you, Derek, because you've been in this industry for so long, and you've always been helpful when someone has questions or wants to further educate themselves. So I want to ask you, what would you tell a young investor that's looking at the mining space, or even, a young investor that's looking at coming into the mining space?
Learn how to do your homework. You just heard me rant on about being very bullish on my mining property, and I happen to be, but not everybody. Hey, check me out. Learn the tools. One thing that you have that we didn't have back, in the 90s, and that is the ability to do your own due diligence before you get involved with a deal. So you basically, in the old days, had to take a broker's word for it or a mining promoter's word for it. Well, you don't now. You can go. You can learn the tools.
You have the access to the information yourself.
You go to CD. You can do Google searches on the people. You can look at all the content they have in line. Ultimately, before I put a serious amount of money in any deal, I would like to go meet the management, or at least Zoom them now, I guess.
Yeah.
But yeah, it's not rocket science. You can find out where shares are issued. If some guy is taking a couple $100,000 a year of salary and he gave himself a few million shares at nothing to start the company, well, what are his motives really on the company? It takes a while, but you got to get a sense of this. But it's going to be a lot easier because there's a lot more tools now. There's a lot more accessibility to market data, as well as information sessions like this. Just do your homework. I tried to put some educational videos on my Conduit site, Conduit Capital, conduitca.com. We kind of got sidetracked because my video camera got stolen with 10 hours camera. But we're trying to do these sort of 30, 40-second videos where we explain to people that don't understand the markets how they work.
And this is available on the Conduit site?
Yeah, conduitca.com.
Great.
conduitca.com.
And what about Tocvan? If somebody wanted to go ahead and research it a bit more, look at some of your press releases, your presentation, and
all that stuff. So there's a presentation on the company. There's a separate presentation on both Pilar and Rogers Creek. There's 43 101s. I think there's some videos up there as well, and all the news releases. So
yeah, no, having or being able to provide access to this type of content is great. And again, Conduit IR, the site, will definitely have this stuff. You can also visit the Canadian Securities Exchange on YouTube. We've got, interviews with CEOs, thought leaders, just generally within the Canadian capital markets, or I should say the global capital markets, and be able to better educate yourself on what's happening out there.
And you know what? If you can't do that, because it takes some time to do all this due diligence, don't be afraid to use a broker. There's some really, really good brokers out there. One of the real things that changes the discount broker, the ability to trade stock for $9 or $7 or whatever, has taken a lot of the ability for a broker to work in this business out of it. But there's still some left there that, if they're still left, there's a good chance they provide a hell of a lot of value.
Absolutely.
We've been rambling on a lot, but there is a positive change here, and I don't understand why it's not more utilized, but it's on a type of financing. It's called a private placement. So historically, when I was a broker and up till a few years ago, the only people that could participate in a private placement were what was called accredited investors. So in order to qualify as an accredited investor, you had to make over $200,000 a year or have $1 million liquid net worth. They changed that a couple of years ago. Anybody can go into a private placement now, as long as what's called the suitability exemption exists on the subscription agreement, and you go through a licensed broker. So we've just gone from about 2% of the population to everybody that can now participate in private placement financing.
Yeah.
And sometimes that's really, really good way to get involved. You often not only get a share, you get a warrant as a sweetener, you get a specific price. So it's one
get a flow
you
through.
might want to work with a broker, and I think the brokers should be quicker to adapt this thing that the regulators gave us that is good for the markets. I mean, it's there, it could be utilized, but it's very, very seldom utilized, I find. So anyway, there's a positive from the regulatory front.
Well, no, you're absolutely right, Derek. I truly appreciate your time, you joining us. I want to wish you a happy birthday from the Canadian Securities Exchange team.
Yeah, thanks guys for everything you guys have been doing. I'll tell you, the Securities Exchange really works with the issuers, and there's some awesome personalities in there, and it's great to see you succeeding. Even it was pot that got you started. Now we're into a mining market.
Well, yeah. I mean, it's funny because people still sort of have that attachment where they think we're, a cannabis exchange or a cannabis focused exchange. But if you actually look, we've got a big roster of mining companies, like you mentioned, as well as tech companies. It's not strictly a cannabis exchange. And
no, I know, but
I was just letting everybody else know. I know.
Yeah, I apologize, but just great people to work with, and there's some good people on the other exchange too. But I've been sort of around you guys since the start. I'm really rooting for the success, and it's great to see. So
that rooting goes both ways, Derek.
Yeah.
We wish the best of success to you and your team at Tocvan, as well as Conduit IR. I look forward to talking to you again, hopefully in person.
Conduit. And we changed the name. It's Conduit Capital Advisors.
Conduit
now.
Capital. My apologies.
No,
you mentioned that a couple of times.
Don't apologize. Yeah, that's all right.
Well, like I was saying,
Right.
I hope we see each other in person sooner than later. If not, we'll have to do another Zoom conversation.
Okay, that was awesome. Thanks, Anil. Cheers. Have a good
Likewise.
Good day.
Have a great day, Derek. Enjoy yourself.
Yeah, thanks. Bye now.
Bye. This has been another episode of #Finance, brought to you by the Canadian Securities Exchange. Thank you for liking and sharing our content, and don't forget to hit subscribe if you haven't already.